another beautiful one. You can basically see how the market was trending to the upside, creating higher highs and higher lows, a higher high and a higher low. And then right here, we broke structure. So right here, this is your key level. You mark the key level, and that's your area of interest where you're anticipating for a retest to sell off. Now, the moment price is coming here, you're just looking for confluences resting inside this zone that will align with this trade. You literally go to 8 hour, 4 hour, 16 hour. Look for anything that you can see, maybe an inefficiency, most likely for me. That's what I would prefer to see. And right here, you can see that we have a very nice inefficiency resting right there. And that's your key level. You've aligned it with the mitigation block, the break of structure on the daily, and an inefficiency on the 8 hour. And all your points of interest, your analysis are from the higher time frame. The only thing you're now doing is using the lower time frame to look for your entries into that trade. You can now say, yeah, I want to use maybe a 4 hour break of structure or a 1 hour or a 30 minutes break of structure. Now, you don't always have to do the three time frames to the left. Sometimes, if you're skeptical, wait for a higher time frame to break. For example, in this case, you can see that price came here and it created a low, created a high, broke structure. This is a 4 hour break of structure. So the market is already showing you intent that it really wants to go to the downside. You can still use your 1 hour break structure. You can see that on the 1 hour time frame, it's literally the same price action. Low, high, break of structure. The same 1 hour low is the same 4 hour low. So all you do now is looking for your entries. And look at this now. Look at this one now. This is going to help you a lot. You can see that this is the move. This is this price action. Look at what happened here. Created a low, created a high, created a low, created a high, and then broke structure. So this entire zone right here now becomes your mitigation block. This is one thing that will guide you. This is already giving you a telltale sign that inside this area is the mitigation block. So anything can bring price to come up deep. When you look at this, you can see that there's inefficiencies. This is some trades. There are some trades that you're going to take that when you take those trades and you show people your entries, they will be so shocked why you took an entry from that specific area. This is one of those trades because this mitigation block is showing you that this entire zone is going to be a sell zone. You're now looking for key levels that are inside here that can attract price to come to the upside. Now, first thing you're seeing here, you're seeing low resistance. So your analytical mindset is now telling you that price is going to want to run this low resistance. And secondly, you're now seeing multiple imbalances. You have an imbalance here, and you have another imbalance here. And then you have the remnants of this imbalance here. So that's giving you a telltale sign that price could want to either use this, or that. Now, what do? You can scale up time frames and try to minimize those inefficiencies to at least just one. So now you can see that we have just one inefficiency. So that makes your job a lot easier. You can literally come right here, mark this inefficiency as one inefficiency. You can place for me personally, if I was taking this trade, I'll place my entry right here. My stop loss will be right here. Look again. Can you see what's here?
Yes, sir.
What is this?
That is a fair value gap.
No, what is this above here?
Okay. Above that candle, right?
Yes, here.
That's li- that's liquidity.
Candle without wick.
Candle without wicks. Liquidity.
So that's also giving you a telltale sign that price might want to come up here. So you can either use, now, if I feel like price might want to come up here, I still won't put my entry on this high. what I'll do is I'll just use my fib and measure this inefficiency, and I'll put my entry at the 50%. Now, the reason I usually do it this way is because I like to just set my limit order and go about my day. I don't like to keep checking, has it hit in, has it tapped in, did it tap me in, and stuff like that. I really don't like that. I just want to put a limit order at a really good area that I know that price will most likely come to that area to mitigate. And now look what happened to that 50% of that inefficiency. Can you see how many times price tapped that area? One, two, three. That same specific area, price tapped there 3 times. So no matter what broker I'm using, this is definitely going to activate me.